Co-Chief Investment Officer, joins us with Mirrae Asset Management. Rahul, fantastic to have you back and thank you for joining us. Rahul, if I look at the news flow this year, the news flow has not been very constructive. Crude prices have gone higher. We've got LTCG, earnings have not been great, bond yields have gone higher. But despite so much of underlying negativity and negative news flow, Indian markets are still in the green for the year. So what explains this kind of an constructive, or what explains this kind of an price action?
I think the positivity is explained by the fact that look, you've got an underlying recovery which is underway. So you look at the data, whether it's cement production, whether it's the auto sales, all that is positive, and hopefully that translates in the quarterly earnings. So I think that's what the investors are kind of hoping for, and which is why India's done reasonably well in last couple of months, basically.
Right, right. So Rahul, now that we've rolled the carpet on earnings for this quarter, how do you see this earnings season giving us some sense of the trend for FY19? Do you think earnings will finally rise?
That's really the expectation. See, we believe that private sector banks, particularly with those focused on consumer financing, will continue to do well. Autos, one is expecting bumper numbers. Cement, you may see EBITDA margins get impacted. But look, if these companies give good visibility on volume growth revival, that should be positive. Industrials, one would watch the order books. The sense one get from channel checks is that order book build-up's been fairly good. So I think that's what market is buying into from a forward-looking perspective. From a negative side, again, clearly crude is a concern. The uncertainty on elections next year is something weighing on markets' mind. And more importantly, from a global EM perspective, China is a big concern.
You know, Rahul, just this morning, or for that matter, off late these mornings, the big devil has come back, and that's crude prices. And now with the spiral up all the way to 72, people are talking about, the chartists are talking about breakout levels all the way to 80. There are some reports already coding that crude could very well head to that triple-digit mark as well. Do you think that's going to spell problems for the economic situation? Because up until now, we were just, celebrating that the RBI is going to be in a pause mode and perhaps for a prolonged period. That assumption could get challenged.
Okay. Look, when crude basically caused problem for the economy, I mean, economy was nearly half the current size in 2007. Crude was at least 50% higher, $120 per barrel. So here the numbers are much lower. What's happened is over the years, governments not really cut the excise duties. In fact, they've increased the excise duties on gasoline, diesel, etc. So should you see revenue collection pick up from GST, from e-way bill implementation? I think the way this plays out is government keeps the retail prices at a similar level, but cuts, or it gives government the leeway to cut your duties on these petroleum products, and that should be okay for the economy. So I don't think that's really an issue from an India perspective. There are two big issues. It's again this tax collection is not picking up, markets not getting confidence on government being able to meet the fiscal deficit target, and finally trade deficit, which is showing some signs of kind of an higher levels or vulnerability, but still it's not really at a 2.5 or a 3% level, which really makes people very worried.
Okay. Rahul, a lot of global investors are invested in Indian private banks, and there are concerns which are real in nature, whether it is leadership or whether it is at the management level or even the book quality. Are you now worried about some of the corporate private banks in India, and could you be looking at relooking your entire investment thesis for Indian corporate private banks?
Look, what happens is investors are going to vote with their feet. The experience has been not the best in class for the corporate governance Indian private banks were known for basically. So I'm sure we've not really heard the last word on that. Obviously, activism is going to be a lot more higher on whether the management needs to be voted back again in most of these banks.
Have you reduced your exposure to some of the private corporate banks?
We've got some exposure over there. There is deep value. So one is willing to through a period of underperformance. But the hope is that shareholder activism gets a lot more pronounced in coming quarters here.
35 points for Nifty. It's turning out to be a good start. It's turning out to be a decent start. This is despite the fact that crude prices are not exactly at the right point which will excite bulls. And you know the point which I've been making, that look at the market, look at the news flow. Crude at $72, bond yields at 7.6%. Earnings recovery, while it's still debatable whether it's real or not. The macro data is not encouraging. LTCG, a real, it will have a real impact on the way how future returns would be calculated. So a lot of things have gone wrong, but the market surely have managed to climb the wall of worry. We are not far away from a record high on benchmark indices, and for the year, benchmark indices are actually sitting at a record high. Rahul, I'll also like to draw your attention to what is happening to some of the consumer names. As an investor, are you comfortable buying into the Titans, the Jubilant Foodworks and the HULs of the world? These are expensive stocks, but they were expensive 2 years ago, and even though growth has been mediocre, these stocks are going up on a daily basis. So what's the underlying thought here? Because a lot of these consumer stocks, Rahul, according to the shareholding patterns, is currently owned not by domestic investors but by foreign investors.
Look, we've liked these stories in the past. About a year or two back, we were saying that these leading consumer franchises would be the big beneficiary of uptick in discretionary consumption because of market share gains, and we've seen that play out, whether it's a Titan, whether it's Juvi, etc. The SG numbers reflect the same. Valuations clearly don't give comfort to add at these levels, but yeah, existing holdings, one is continuing to hold on with the logic that these stocks will go through a period of time correction over 1 or 2 years, and then the earnings will catch up. But yeah, I would agree with you that look, valuations have limited margin of safety at this point of time.
Rahul, what about IT? Because aside of consumption, that's been the other strong leg that has really, aided the kind of recovery that we've seen from the February-March lows, or for that matter, all of last year, actually. Do you think this cross-currency tailwind is going to aid IT stocks for some more time to come, or do you think the litmus test is going to be pretty soon? We've already seen that transpire with Infosys. Today is going to be TCS, and the earnings may not really live up to the way the stocks have performed.
Okay. See, in an year of moderate returns, which is 5–10%, I mean, IT may not be an underperformer because look, the dollar revenue growth for most of these companies would be anywhere around 6–9%, and rupee depreciation clearly helps in terms of the margins, etc. But should a recovery be strong in the economy, then IT is going to be a laggard in the economy. So it's not a function of what happens on the current account deficit and what happens to the growth pickup in the rest of the economy.
The bet on housing finance is big. It's just interesting to note that there's not such a consensus opinion on the underlying housing market and companies servicing that business. So real estate companies are not finding that much favor. However, selectively, because of the new regulator coming in, you're looking at the high quality real estate companies with good execution capabilities really finding favor in the market. So which way are you evaluating this opportunity set?
See, clearly, if you look at a affordability factor, housing's been the most affordable it's been in last 20 years, and you're seeing the signs of bottoming happening in the sector. India is one of the few markets where property prices have not gone anywhere for last 4–5 years. If you look at most of the markets in the region, the prices would be up at least 30–40%, while the incomes have grown locally. So clearly, again, attractiveness of the sector is there, and post-RERA, what we've seen is big boys gain market share at the cost of smaller fringe players whose cost of capital has gone up significantly, who've got to comply with so many kind of regulations, etc. So from a 5–7 year perspective, the sector is extremely promising. I mean, you look at other markets like China, property developers would be at least 5–8% of benchmark, and in India, they form a fractional amount. So I think if you ask me from a 5–7 year perspective, where is value? Property is one sector. Insurance selectively is something which can be meaningfully larger in due course, basically.
Property, Rahul, brings me to the other segment that you're extremely gung-ho and bullish on, and that's affordable housing. Given how large the umbrella is from everything from HFCs to some of the property developers as well, to tiles, paints, what have you, what within the affordable housing segment or umbrella is it that you like, and do you think still has value on the table and still can be bought into?
I think what's happened here is you've seen some good start on affordable housing, but you've not seen meaningful large numbers to move the needle here. So if you want to play that from a longer term perspective, like the way you said, I think paints look interesting. Though near term the stocks may kind of languish because the raw material prices are going up, and they started with extremely high margins, but that's their consumer appliances again. Looks interesting from a 3-4 year perspective. Valuations is the issue from 6 to 9 months here also. Cement is one sector which is not really participated. So if you believe that housing picks up, most of these names are trading at close to replacement cost, EV per ton of anywhere between, let's say, 140 to 160. With limestone's cost going up, obviously the replacement cost is moving higher. So one would look at select laggards which can kind of do well over 12 months. And from a 3-5 year perspective, paints, household appliances look interesting space.
Rahul, metals. Now, classic long-term investors, they say, look, we don't like metals, because metals are too cyclical, we like to buy compounding businesses. But somewhere is a time to get more sanguine about metals also now, because there is a lot of supply side discipline which has kicked in, at least from China. And if China maintains discipline, it clearly means that commodity prices will not come down in a hurry, because they will not be in a business of dumping production out. They are also now suddenly focusing on profitable growth.
Clearly, I think the big change has been China. I mean, we were initially skeptical in 2016 when China first talked about supply side reforms. You'd heard the stories so many times before that it was like a crying wolf number of times. But look, under the new leadership, they've gone about implementing it very seriously. And that's where you've not seen significant additions of capacity. You see significant capacity closures around Beijing area in the Hebei region for steel, aluminum, etc. during the winter months. And again, the key data to watch is net steel exports out of China. The number which used to be 70-80 million tons has been below whatever 50-60 million tons, or around 50-60 million tons. So that's positive. And globally, you're seeing a pickup of demand. So with that backdrop, I think metals from next 6-9 months offer an attractive risk reward. And some of these metal companies in India are benefiting that, look, they're getting these assets from the bankruptcy courts, which with a spend of 10% can commercialize production in next 3 to 6 months. So that's an added positive for some of the names.
Okay. Are you a contra buyer in pharma? Because at least the bad news in pharma seems to be receding, and we are also getting a sense that the pricing decline what some of the Indian generic companies experienced in 2016 and 17, that trend now seems to be nearing an end.
Okay. See, I would wait for some more time before initiating positions in the pharmaceutical sectors, because the big trend in pharmaceutical sectors is biosimilars. And a lot of these are good, smart companies. And I think what would happen is they would significantly up the spends for the next big wave of growth opportunity, which is biosimilars between 2020 to 2030. So despite pricing pressure being low, what you're going to see is margins being low for next 3-4 years as these companies invest in future businesses. Where I would be contra buyer in next 1 or 2 quarters would be telecom. Look, clearly we've seen market share being consolidated between the top 3. And as Idea Voda goes through the merger, fortifies the balance sheet, clearly we will see some bit of an ease or respite on the competition over there. And that's where I think there is a money-making opportunity for a long-term investor, basically.
It's really surprising, Rahul, that you've got a call going on telecom, because, you know, just this morning there are reports that Bharti is again trying to fight back and lure their customer base. Stiff competition from Jio continues, and they've announced that 30 GB free data for users upgrading to 4G. But I'm sure you've got your rationale behind why you like telecom. What about aviation, Rahul? Because, you know, that's another consumption segment, if I can call it that, that's really been catching fancy. From the start of the year up until now, you've seen very, very strong monthly passenger traffic data. And it's interesting as to how contrasting the companies within aviation are. Just 3 listed players with extremely different dynamics. dynamics, very different balance sheet qualities, very different fleet sizes, market share. So what do you pick and choose within aviation?
Okay. No, I think it's an interesting, promising space. The only issue there is, look, India is a high growth market, but at the same time, you've got a supply side response which also comes from the other players, and that impacts pricing. But yeah, for last 6 months, that's not been the case, and which is where we've seen the ticket pricing being good, and that's reflected in performance of the key players. I think a good way to play the travel and tourism stories would be play the likes of OTAs, the online travel agents. We've got Ctrip, which was listed in China, Make My Trip in India. I think this space becomes meaningfully larger over next 5-7 years because what we've seen is close to 5% of Chinese population has passport. In India, that number is much lower. And we all live in an experience economy where we share our travel pictures on Facebook. So travel is something which is going to be an important component of each one of our lives in coming years.
Listed travel companies in India, I understand it's a great theme, but I can only think of maybe 2 or 3 travel companies. Thomas Cook, which is an investment company, Cox and Kings, where you will not buy it because of debt, you only left with Mahindra Holiday. I'm not trying to move towards a stock specific comment, but I also like travel as a theme, but there are lack of ideas.
No, I get it. See, for us, again, an option is we can buy into ADRs, and that's where some of these companies are listed. The other way is aviation to play the theme. I get what you're saying, but what happens is when a sector does well, you have new IPOs, and that's where you get interesting opportunities.
To conclude our today's interaction, what is your India positioning in comparison with other emerging markets? At a time when commodity prices are moving higher, is there time to go underweight on a market like India and perhaps revisit Russia and Brazil? Or you think that the appeal of earnings recovery is strong enough and you would not like to reduce your India weightage?
Okay, we'll be still in the later camp that look, earnings recovery is going to be strong with normal GDP pickup. Your tax collections kind of improve. Again, some of these GST e-way bill issues been initial teething issues, but I'm sure it's a smart regime. They'll get over this. And once you see tax collection pick up, then you will see pragmatism come in terms of retail fuel prices also that look, the consumer is taking a lot of the tax, or some of these oil products are having too much tax, so they'll cut it, and that's where people will get comfort on. One thing which one would watch very closely for India is the trade deficit. I think the exports have not picked up, so somewhere you need to see a serious initiative from government on import substitution, primarily towards electronics and boosting the exports.
Rahul, great to have you on the show today. Thanks very much for taking out the time to speak with us about your thoughts on the market.
Thank you.